Okay, could you repeat that again? So, like, I'm telling you right now, I'm currently living in Ohio, so I'm not sure if you're able to pull up the information, but taxes are the percentage. So, let's say hypothetically, I made a bet. Let's say put DraftKings, right? I made a bet parlay. I put like, let's see, $2,000, and I won like over $1,333. That would probably be a short-term gains tax. So, how much money would I need to be just to save to set aside to make sure that I have enough money from that just to pay off whatever I owe when it comes to taxes?
For short-term gains, such as your DraftKings example, the tax rate is the same as your ordinary income tax rate. In Ohio, your federal income tax rate would depend on your total income, which varies based on factors like filing status and other income sources. For simplicity, let's consider a federal tax rate of around 22% for your income bracket. So, for a $1,333 short term gain, federal tax 22% of $1,333 equals about $293.26. Ohio has a progressive income tax with rates ranging from 0% to around 4.8%. Let's use an estimate of 4%. Ohio tax 4% of $1,333, about $53.32. In total, you want to set aside about $346.58 for taxes on your short term capital gain from this example. This is a rough estimate, so it's always a good idea to consult with a tax professional for personalized advice.
Oh, I know. I just want to get like just a rough estimate so I know how much money I would need to set aside. One of the things I learned from doing, I'm an investor, so I've done like my fair share of stock trading. I've done what's called day trading as well, contract sell. When it comes to Robinhood, and I tried a little bit of Fidelity, but when it comes to that experience alone, how much of money I think it was like the 1 year I think was during the crypto bull run, but anyway, it was all short term capital gains tax I had to pay, and I did not know. I was just being foolish and not knowing that if I do these trades, I'll end up paying a lot more back. So that's one of the life lessons of like, hey, just have a game plan, take control, and assess the situation, and really just kind of follow through whatever game plan you had set from right from the beginning, though. But anyway, getting off track. So, as an investor, like, would I be able to get another thing? Like, since I own a parcel lot, land in this case, would that, get like some sort of form of tax reduction? And for I own as well as a house. I heard from another person, actually my mother, that you can get tax reduction for a house. But does that would that be counterbalance that subtract the 293, or how would that go?
Owning property, like land or a house, can indeed offer tax benefits. Here are a couple of ways they might apply. First, mortgage interest deduction. If you have a mortgage on your home, you can deduct the interest you pay on the loan from your taxable income up to a certain limit. This can be a significant deduction. Two, property taxes. You can also deduct property taxes paid on your primary residence and other real estate, which would include your parcel of land. This is capped at a total of $10,000 for state and local taxes, including property taxes and either state and local income taxes or sales taxes. As for offsetting capital gains, these deductions wouldn't directly reduce your capital gains tax liability. Instead, they reduce your overall taxable income, which could lower your tax bracket and consequently the rate you pay on short term capital gains. The mortgage interest and property tax deductions wouldn't directly subtract from your capital gains tax owed, but by reducing your overall taxable income, they could lower your tax rate. It's always a good idea to consult with a tax professional to explore how these deductions.
Yeah, that's true. Now, let's say for instance, I got some like I just sold a few cryptocurrencies. I'm an investor, like I said, like I done for stocks. I own a partial plot of land, and I'm getting a house, planning to get a second one, and trying to build like this little like wealth empire of mine. So, but anyway, when it comes to cryptocurrency, I did sell some. It just make some payments, but I let's throw a number out there hypothetically, like 4K. So I pretty much held on to these cryptocurrencies and the money for is probably over about a year, so that would be considered long term gains capital tax, right? So, and to what percentage on Ohio's tax law, how much I'll be expecting to save or put to the side in that scenario? Like, well, let's say 3,000, no, it's $4,000. How much money I'll be expected I have to pay back or save set to the side in case.
Since you've held the cryptocurrency for over a year, your $4,000 gain would be considered a long term capital gain. The federal long term capital gains tax rates are 0%, 15%, or 20%, depending on your overall taxable income. For simplicity, let's assume you're in the 15% long term capital gains tax bracket at the federal level. So, for a $4,000 long term gain, federal tax 15% of $4,000 equals $600. For Ohio, long term capital gains are taxed as ordinary income. The state tax rate ranges from 0% to around 4.8%. Ohio tax 4% of $4,000 equals $160. In total, you'd want to set aside about $760 for taxes on your long term capital gain from this cryptocurrency sale. This is an estimate, so consulting with a tax professional for personalized advice is always a good idea.
So I pretty much just looked over the numbers. I'd pretty much be looking to pay back just on the hypothetical situation, like over about $1,000, which is all right. I mean, it's not too terrible, but it's still some money that, well, what can you do? I mean, also those other variables and factors too you mentioned too, Clara, about like what I put in my W-2, that also could influence or change the way, the percentage of how much money is going to be taken out or put in or subtracted. You know what I mean? So, I'm just also this is an off-topic question. So when it comes to humanoid robots and or robots in general, are they considered like any form like taxes? Like are they considered to be employee or to employer? Like you know, probably not as much as robots, but is there some form of tax reduction in that field? And so like is I know humanoid robots is kind of like a newer field, but since they are working for the company, how would that be taxed? And I guess it'll kind of vary because there hasn't been one set up yet here in Ohio. Since once we get humanoid robots, then that will be everything will kind of just unfold on its own. It's still somewhat the wild wild west from what I've heard.
That's an interesting question. Currently, robots, including humanoid robots, aren't considered employees, so they don't pay taxes like humans do. Instead, businesses that use robots might benefit from tax deductions or credits related to their use. For example, businesses might be able to deduct the cost of purchasing and maintaining robots as a business expense. There could also be tax incentives for using robots, especially if they're part of innovative or efficiency improving processes. In Ohio, like in other places, the tax implications for robots would depend on state and federal tax laws. As of now, there's no specific tax treatment for humanoid robots, but it's an evolving area, and tax codes could adapt as the technology becomes more widespread. Humanoid robots would likely be treated as assets owned by the company,
Mm.
rather.
Oh, go ahead. I'm like, yeah, I'm just agreeing. Like, yeah, okay, okay. I know eventually they'll come around. Humanoid robots are already tested in different areas of all parts around the world, from like Tesla to Boston Dynamics to other major robotic companies that are leading. There's a few actually quite in China. I'm actually getting one from Unitree. So yeah, it's quite interesting from like the amount of like people heavily invested in seeing the future and trend and all with the computing power. with Nvidia and all the stuff going around the world currently. So it kind of led to this whole entire ripple effect. And here we are right now. And I just like to know where we stand in the next few years. Proper preparation prevents poor performance at 5 Ps. So as one of my buddies told me. But anyway, that's something that, you know, I should always like to take in consideration now.
Absolutely. Staying informed and prepared is key, especially in such a rapidly evolving field like robotics. With companies worldwide pushing the boundaries of what's possible, we can expect significant advancements in the next few years. It's fascinating to watch how robotics, AI, and computing power are shaping industries and even our daily lives. Being proactive and knowledgeable about these trends will definitely give you an edge in navigating the future.
Oh, sounds cool. So any last message you want to say to the viewers at home, to the internet, to the people of the world, Clara, on anything about like tax advice? I mean, the way I learned it from my mother, she used to say this all the time. I want a pan pan mayo. Always save a little money for the side. But it's I have a great mother. Um, yeah.
Your mother is wise. Aguara pam pam mayu. Always save a little money for the side is excellent advice. To everyone out there, remember that staying informed and planning ahead can make a big difference. Whether it's managing your taxes, investing, or preparing for the future, take advantage of resources, ask questions, and don't hesitate to seek professional advice when needed. And most importantly, always save a little for a rainy day.
Oh, best believe I'm gonna ask questions. I'm always the kind of curious George, but I'd like to say thank you, Claire, for being here with us. So probably wrap this up. It was nice talking to you, Clara, and then probably end the conversation here, though. So
I'm glad to hear you're so inquisitive. It's been great chatting with you. Feel free to reach out anytime you have more questions. Take care.